Good evening. So we'll be taking over from the previous class, and I'll start with the economic survey first chapter. I gave you a context of how our economy, is shaped in the last 1 year. Going forward, what are the challenges that we are going to face, and how to go through this entire tumultuous phase. These are the metrics that we'll be focusing on, and I gave you a overall snapshot of how we have to proceed going forward. Okay, so we are looking at the state of economy pushing the growth frontier, the first chapter of our economic survey. Consider this like a quick summary of the first chapter. So when you're going through the first chapter, you will come across some key terminologies which are probably not explained in this class, because this is not a core economy class, and I'm presuming that you already know this. If you are stuck somewhere, you can go back and verify, or maybe I'll try to explain then and there itself if you are stuck somewhere. Now, here, overall, the strategy that we were discussing in the previous session, India want to become an entrepreneurial state. What do you mean by entrepreneurial state? Mitigating risk. So managing risks is a very important part of our strategy going forward. Risk mitigation. The risk is primarily occurring because of geopolitics. So you are now witnessing a trend where risk is because of economy. What is economy? It is allocation of resources for efficiency. Now, in the diplomatic activities, there is a concept called statecraft. Statecraft means utilizing your strategic strength and getting your job done. The present trend in the world is moving away from globalization and is using their economic prowess as a statecraft tool. And this is the context in which India is operating, and therefore resilience against this trade wars and other strategic economic tools that other countries have. Let's say, for example, US. They have a huge advantage with respect to trade. So they are using it to their advantage. This was not the case in the last 3-4 decades. After LPG, India witnessed the peak globalization period between 2000 and 2014. Okay. In fact, to be very honest, India was kind of insulated from the post-2008 crisis because we had a strong domestic demand in that time period. Having said that, the benefits that globalization gave us accrued to India till 2015. But after 2015-16, when Donald Trump came into the picture, the world moved away from the World Trade Organization and started moving towards this checkbook diplomacy or checkbook diplomacy of China, where they are trying to coerce the smaller powers. And here on the other end, US was resorting to trade wars. Eventually, there is no predictability in the world. On the top of that, you are having geopolitical tensions, Middle East, Ukraine, even in other parts of the world. Now, currently, you are witnessing Venezuela, Greenland, other areas which are seeing this turmoil. We already discussed this part. I'm not going into all those specifics again. So, how do you come out of this situation? What are our strengths? We are focusing on the so-called structural reforms to make our economy stronger. In fact, when the world predicted that we will slow down, the growth numbers show quite the opposite, that we have grown. We were discussing the structural reforms taken up by India, namely labor reforms. What else? What are the factors of production? Land, labor, capital, enterprise. With respect to land, we did not discuss this in the context of survey, but overall, land acquisition should be made easy. With respect to labor reforms, 29 labor laws, which were very scattered, 4 courts were created in 2020, which came into force last year. That part is addressed. What about the next one? Capital. When it comes to capital, we have seen how capital mobilization through formal channels, namely banks and markets, is happening. We have seen this. With respect to banks, the major issue is non-performing assets. Situation has improved really well. I'm not saying everything is perfect, but it is definitely better than what it was in 2014. So this is a success. What is non-performing asset? How does it work? What is this problem? We will deal about these concepts in our chapter on monetary policy when we are dealing the respective economic survey chapter. When you're talking about the markets, we spoke about the post-pandemic era rise in the number of people participating in the markets and the need for India to consolidate household savings and mobilize them towards our own companies instead of depending on foreign capital, namely FDI. Okay. So historically, if you see stock market, okay, without an assumption that you know about stock market, let me tell you what it is in simple words. What is a stock market? Let's say if I want to start a company, I will put my product in that market and say, if you like the product, if you think I can grow my business, here is my strategy, come and invest. Who can invest? Both Desi as well as Videsi. Usually, we depended on foreign portfolio investors who walked in and walked out as they wish. So, when this happens, there is a lot of volatility. There is no predictability in the market. After pandemic, the influence of FPI has marginally reduced because domestic retail investors stepped up. Number of people willing to take that additional element of risk. In the post-pandemic era, wage growth was pretty decent in the working class, especially software jobs. In the pandemic, digitalization of almost just about everything gave rise to significant increase in number of jobs and also the wage growth because there was instant demand. Okay, that is reducing now thanks to the AI challenge. We are navigating the world in this kind of a setup. Let's see what the survey says. Okay, so what are the new rules under which we are operating? A shift from pure efficiency to geopolitics. Previously, in a globalized world, what used to happen? Let's say if India does the back-end office work efficiently and the front-end research work was done by US, it was outsourced. Now, that market logic is taking a backseat and countries are trying to dominate one another. Why is this happening? There are two things. One, the money that circulated in our economy, global economy, significantly increased after pandemic. There are no free lunches. If you print money today, you have to pay the interest. When pandemic struck, lot of countries, just because they were having very low interest rates, as low as 0 to 1%, truckloads of money was printed. But even 1% of a trillion is a huge amount. Who will pay that interest? Of course, the future generations. 6 years down the line, today, the world was grappling with inflation. So the central banks had no other option but to increase the interest rates to control the inflation, to suck out the money from the economy. And as a result, what will happen? When you take money out of the people's hands, less money will be there in the market and economy will slow down. So this is a natural cycle. On the top of it, if you are disrupting the globalized world, the assumption that market will respond to this interest rates is gone. You no longer have that predictability. It is that kind of a world we are living in. So we are moving away from pure market driven efficiency to geopolitics. Then, usually in a globalized world, you are witnessing free flow of people and ideas. Technology used to be flowing freely. Of course, I'm not talking about special deals like Rafale where technology transfer is a clause. Usually, did anyone stop, let's say, access to Microsoft Windows? No, right? You never heard of anything like that. Take the case of India. We banned TikTok, for example. Take the case of US. Many, critical technologies and access to those critical technologies were out of reach for many countries. On one hand, you see Chinese smartphone makers like Huawei trying to create earth-shattering technologies like almost unheard in US markets at a throwaway price. The markets denied entry to that. Honor, Huawei, etc. So we are living in the times where even technology is controlled, and we spoke about the concept of statecraft, where economic strategy like trade wars is used as a tool to control people, and ideas are not easy to flow. People can't travel easily. Think of the H1B restrictions, H1B visa restrictions to US. This is the word. So what should you do now? See, despite all of these problems, India posted a 7.4% growth. It is projected to grow at that rate, but that's just not enough. In the short term, you can manage some growth story. It's just not sustainable in the long term. We need to reduce this dependence eventually and move away from this economic model that can threaten our growth. So, as much as we would want to believe that we can be independent of the external threats, it is still going to happen in one way or the other. Indian markets will integrate itself with the global value chains. So that element of risk is anyway there. But how can you mitigate the internal risks? How can you figure out the internal efficiency problems? The structural bottlenecks that we were discussing, poor land allocation, labor reforms, inefficient work in every aspect of governance, resource allocation, all this should change. And therefore, the strategy should now be to move away from just economic resilience to making India so powerful and indispensable in the global value chains that world can't ignore us. And this is the philosophy of Atmanirbhar Bharat. Okay? How do you use this entire thought process in various subjects? Here is how you can do it. GS2, GS3 and GS4. In GS2, when the world is seeing economic statecraft as a strategy to get their job done, to get their way, India should do quite the opposite. Become so powerful and efficient in every activity that we do. Let's say if you're talking about the aspect of human capital, make India the skills capital of the world. Aspire for nothing less. Of course, there is a condescending view today that India can't do it. We should question that and challenge the status quo just about everything. Diplomacy, in terms of economic prowess, resource efficiency, research, everywhere the attitude should be to push our boundaries. We don't have a choice today. And this you can see, this thought process application you can see in various facets like AI, semiconductor diplomacy. Of course, India does not have access to critical minerals. But can't we master the manufacturing process and fabrication so skillfully and so efficiently that we can compete with likes of China or Taiwan? China might have the access, but market always respects one principle: profit. Make it so efficient that you have no other choice but to come to India. That should be the way going forward. Economy, it is possible when you allocate resources for upgrading our capacities. And that capacity development should also go towards science and technology. And we should focus on the most relevant areas. 4. Ethical statecraft. When you are talking about this aspect of statecraft, I told you that sometimes it is unfair. Today you might be having a dominant position, let's say US for example. They are literally bullying the little countries that do not have the same leverage. The world will remember. Do you want your legacy to be remembered like this? Or would you want to do what is right? India, if it aspires to be a Vishwaguru, should move towards Dharma as the basis of the statecraft. Vishwaguru ambition should be led by Dharma as a principle. This is how you can interpret this idea in this multiple chapters, multiple dimensions. Okay. Now let's move to the prelims part. If you see the statistics given in our survey, you will see across the world there is a divergence between the inflation and growth. Usually, as an average, if the world is stabilizing, all the regions of the world, all sectors of economy, middle income economies, developed economies, least developed countries, all these countries should more or less reach the historical trends. What am I talking about? Inflation. Okay. I told you when countries pumped in huge amount of money, inflation rose. And as a result, central banks tightened the interest rates, money was sucked out. This was the usual expectation. But is inflation actually reducing as per expected timeline? The answer is no. This is the divergence we are talking about. We are not growing enough and we are not managing inflation. The gap between that is still not closing uniformly across the world. Why is this a concern? Can anyone tell me why is this a concern? This creates regional instability. When you have a lot of frustration built up in different parts of the world, you witness some parallel historical patterns happening. Notice any patterns in international relations of late? The so-called Gen Z protests. When the growth and inflation gap is not matching up in different economies, it simply means that the companies do not have enough bandwidth to create new jobs. On the top of it, you have AI. On the top of it, you have geopolitics. And you are a student coming out of a college sitting on a huge debt, college loans. And you look up to the government and say, boss, please give me a job or just make sure that I have an opportunity. And if the governments do not resort to creative policy making or do not take proactive measures, what will happen? The youth of that country will obviously get frustrated. Case to the point being Nepal, Indonesia, and many other countries are also witnessing the same trend. Same parallel story. The youth of that nation are facing the brunt. This is probably after the World War II period, the most uncertain period of human history in recent times. There is no clarity. How are the technologies going to evolve? Historically, for the past 40 years, 30-40 years, especially after the 1991 LPG reforms, India almost aced the services game. But today you have developments in the AI space that the development jobs, what is the usual expectation? When you are developing a software application, you need some guy to build the code, create the architecture or I'll strip off the jargons and just keep it very simple. Some guy has to build the plan. Some guy has to actually execute it. Some guy has to see if it is actually working. Architecture, coder, tester. Systems architect, developer, tester. These are the nomenclature in usually most of the applications. When AI was, rising slowly, the first set of jobs that people thought would vanish is testers, because it is a repetitive task. Ironically, it is the systems architect and the developer jobs that are vanishing. The high paying jobs. Why is this the case? I'll tell my story from my own circles. A systems architect who used to get 60-70 lakhs as salary, a group of 10-15 people of such level employees were replaced by one AI agent and one guy to look after that AI agent. That AI agent subscription will cost not more than $3,000 per month. How much is it? Roughly 3 lakhs. Roughly, let's say 3 lakhs. Total 36 lakhs. Where is 5 to 6 crores and 36 lakhs here? Simple ballpark figure in one company in a small startup. What will happen? This guy is safe. This guy actually got an increment. The person who stayed, he got an increment. His salary went up from 70 lakhs to 1.2 crore. Rest of the jobs are gone. What will these 9 people do? Either they have to upskill or find one more AI agent that they can control. This is the reality. What about the freshers? What about the middle management? Nobody has a clue. As a result, you are witnessing a stock market crash in all the IT companies. And that's scary for Indian economy. You know why? Even a guy who is a civil engineer would walk into TCS, Wipro, Infosys, hoping that a software job in a cool AC building will secure his life for the future. That's not certain anymore. And what was taken for granted is now questioned. The very existence of the Indian economy, which is a service-led, consumption-led economy, is a big question. You might be wondering, it's only one sector, right? Why should we worry? We can do something else. We can go towards agriculture. You know the story of agriculture. 46% of the population is already overcrowded there. There is not enough land, not much to do. So, not much land also. Economic survey also says the same thing. We have to just make it more efficient. Bringing in more people is the last idea that you can do to make it more efficient. Too many cooks spoil the broth. What are we left with? Manufacturing. Do you really think in an AI world where AI bots, robots, where the most skilled worker of China is also threatened because of AI, we don't know the M of manufacturing in a lot of students? Like, I'm not picking up anyone, I'm not putting anyone down. It is not because we are incapable of learning it. It's just that we never had an ecosystem. And yet, manufacturing is definitely better in the last 1 decade. Is it enough? Not really. Where are we heading? This context and the complexity of the problem makes our economic survey the most crucial one in post-LPG era. And I think this survey did a fairly good job, given the constraints that it is operating under. Why? Let us see. So, if you have to see the questions, what possible trends you have to pick up? All the countries, there is no constant trend here. There are 2 outliers. One is China, one is Japan. I told you Japan is infamous for injecting 53% of GDP into its economy. What is the expectation? It must be facing hyperinflation, right? Surprising? That tells us the story of Japan. Same is the case with China. They also stimulated economy, injected a lot of money. Of course, it's a different thing. We never know what is happening there. We don't even know if the numbers are right. Let's begin with COVID numbers. We don't know what happened there. So, in fact, China and Japan, both these economies are neither facing growth nor inflation, which is a curious case. Let's not talk about China. Survey simplifies this by saying there is no demand for infrastructure. There are ghost towns. Huge cities are built up, but nobody is buying them. That is why there is no growth. That is why there is no inflation. And they're able to fund it from their existing foreign exchange reserves. Fine, fair enough. What about Japan? Where are they getting that money from? Let's see. Because this has a story and implication for India too. We'll get back to this. Yeah. The Chinese case is curious because despite injecting that historical 53% of GDP, there are some underlying structural factors that stopped inflation. Namely, first, there is chronic demand deficiency. Like so much is produced and all of it was exported. There was revenue surplus. Domestic demand is not there. Why is it not there? Because the population is aging. Let's say you buy, you create a, let's say Honda, for example. Honda came up with a fancy 2000cc bike. Very funky, very cool. But the average age of Japan is 50 plus, let's say. They would prefer to buy a retirement plan than Honda bikes. So are they producing for their local economy? Yes, definitely they are producing. But is that enough to sustain high growth? Not really. That is the problem of Japan. The first factor. Second, demographic structure is linked to this. The workforce is shrinking. Then corporate behavior. Whatever mega corporations that you see, let's say the likes of Honda, Sony, Toshiba, they are sitting on cash. They are not increasing the salaries because they think it is not needed. Whether you like it or not, same workforce is happy to work at the same cost. No corporate will be interested in passing on the wages, profits, because they don't know what will happen in the future. They would prefer to survive, right? They would invest and continue growing the company. That's not their job. They are doing their job perfectly fine. Next up, there is a tendency of moving towards deflation because of all these reasons. And finally, one more ironic thing is Japan is known for its extreme supply chain efficiency, that no new investments are necessary there. Even if I want to inject, even that money that was there was used to pay off the old debts. Let's say 53% money was injected, they used to pay off old debts, pension funds, etc. Now there is nothing much to worry for Japan and China. That's not the case for the rest of the world. Unofficial numbers say that we are sitting on a 300 trillion debt for a GDP of 100 trillion. Who will plug the gap? Future generations. How? Nobody knows. That's why you see a surge in alternative currency like Bitcoin, where rich people will be fine. Okay. So let's go back. What are some points that you have to remember? When you look at the policy rates that we were talking about after inflation, you see there is not much difference in most of the countries. So why is this happening? These are the ideas that you have to remember. What are the economic tools? US chip export controls. The NVIDIA chips, they don't go to, NVIDIA, right? NVIDIA is a global corporation which is the leading player in the AI game. The hardware required for running the AI, the semiconductors, the chips, are controlled by mostly American companies and some Taiwanese companies. Okay? The raw material is available with China, but GPUs, the technology, everything, the hardware technology of Nvidia, it is controlled by US. So that is one reason. So even when the countries are trying to move towards AI, the control of tech, that is slightly disturbing. Second, when the hardware maker is restricting controls, the raw material provider is not going to sit silent. China is restricting the rare earth minerals. This has dual use. Some of them are diverted towards AI, other half towards energy transition, namely e-vehicles. Both these are a problem. Next, sanctions regime. For example, Russia-Ukraine war is happening. So recently you saw the entire fiasco between India and US. If India is buying Russian oil, POTUS says, I'll put a tax. How much? Ridiculous amount of 50%. Then you meet him and strike a deal. It is next day down to 18%. If you are a company owner, do you really think you would want to deal with that kind of a person? Not really. They're not at all interested in fact, this is again slightly off the track. This is my opinion. I think half the world is waiting for the end of the Trump's second term. Not half, I would say almost 90% of the world. And also, most probably, including me, again, this is strictly non-academic opinion. There are many times I wondered about the IQ levels of Americans. But maybe it was right for them. It is not right for us. We are sitting outside. Maybe it helped them. I do not have enough data and political analysis skills to understand the needs of that country. Maybe it helped them. But definitely, I would want him out of power if I have to safeguard my savings and investments. Not just him, that would be true even for Elon Musk, who supported him to power. If Elon Musk can't deal with Trump, I don't think anyone else in this world can. Anyway, coming back. So we are moving towards the need for that strategic security. And we got to learn from China and Japan, especially in the terms of supply chain efficiencies. So we were discussing the other day about fiscal deficit and primary deficit. I'll ask you a question. If primary deficits are increasing across the world, is it a good deal or a bad deal? If primary deficits are increasing across the world, is it a good sign or a bad sign? Okay, fiscal deficit and primary deficit, what would you prefer? If both have to increase, okay, one more question. Can fiscal deficit increase and primary deficit reduce? Is it possible? Yes. Is it desirable? Depends. You can neither say yes nor say no. If you're borrowing money, what would you do ideally? Let's say someone gives you money. What will you do with it today? As of now, today, you are frustrated and someone gives you, I'm going to give you 10 crores, stop UPSC preparation. How many of you are willing to stop? Trust me, you are never going to get legally 10 crores in UPSC after clearing it. Anyway, coming back. What would you do with that money? The money, any responsible country should ideally put that money for a future where your capabilities are enhanced. Roads, infrastructure, people, education, health, these kind of stuff. But if I give you 10,000 rupees per month subsidy to prepare for UPSC, do you think it's efficient allocation of money? You're all graduates. and you want to prepare for this exam, fine. You can pretty much do that while you're working. I know it's difficult, but it's not the state's prerogative to invest on this for an exam conducted by the government itself. We would rather invest that on skilling someone who is willing to work in, let's say, an AI based fabrication industry. Operations management is a huge skill gap for our manufacturing sector. Why can't we skill people there and give money to the companies that are training them? That's a better way of utilizing our money because it is capability building. When companies invest in India, this is going to be a very good factor to attract capital. So these kind of structural problems are there in our country, and not just our country, across the world. Post pandemic, primary deficits are increasing, which is a bad sign. Let me tell you why. Take a look at this infographic. Fiscal deficit. Okay. Country A, country B. In both the cases, fiscal deficit or the total cumulative money that you owe to someone. Okay. What is deficit? How much you earn and how much you spend. Okay. In 1 year. That is fiscal deficit. The gap between that is fiscal deficit. If you are having two countries with same levels of fiscal deficit, one country is using that to service the debt which they took loans previously. You took 100 rupees loan, you are paying back that 5 rupees interest because you have to. And country B is not doing that. It is spending on giving salaries, giving subsidies, and not worrying about the future generation. See, if you have a comfortable lifestyle and you made a terrible business decision, don't you think you have to downgrade your lifestyle if you are a business owner? Don't you think it's the responsible way to deal with it? Not doing so is case B. Problem now, a lot of countries, even the advanced economies, are behaving like this. And in a world where this behavior is normalized, the bubble will eventually burst someday and the consequences will be felt for decades together. You can't control the entire world. What you can do is take care of your own people, and that's what economic survey tries to do. It is trying to show why negative primary balance or primary deficit across the world is a dangerous trend. So you might get a question. There are many previous year questions on the formula of fiscal deficit and how it will change. Primary deficit is equally important to this year. Please go back and refer to that. And any questions on primary deficit, fiscal deficit, pakka you can expect a question this year. Don't get it wrong. Next up. Our economic survey talks about fiscal hysteresis. Hysteria. What is hysteria? An abnormal behavior characterized by rage, excitement, which is not normal. So, we are witnessing a trend where there is a trajectory before pandemic. Suddenly, it got disturbed. For example, the commonly known examples of software employees only I'm giving again. Before pandemic, even people who got 8 lakhs, 9 lakhs salary, suddenly within a span of 1 year started getting 30, 35 lakhs. Then there is this aspect of moonlighting where they're working on 2 jobs. So there is a sudden rise in the level of income. Anything that goes up very quickly will also come down very quickly. And that fluctuation and volatility is not a happy space for investors. There is a huge investor money that got pumped up in the COVID because, when countries are printing money and distributing, investors will have more cash. They will have to park it somewhere. They were willing to take a bet on different startups. Let's say if one of them clicks, the losses made in all of the rest will be compensated. That is the mad rush for startups, especially in countries like India. Now that phase is gone. We are now in a phase where investors are extremely cautious about investing money. How do you know? There are some metrics. There are some symptoms where the investors are tired. The economies are tired. Interest rate, expenditures where the social security nets, they're continuously increasing. And then there is a current account deficit, and many economies face high fiscal deficits along trade deficit. Current account deficit, fiscal deficit. When all this combinedly happen simultaneously, investors are almost scared of taking any decision. Okay? I'm trying to keep it jargon free, and I'm trying to keep it like a story so that it sticks in your mind. So when you're preparing now, you have to know fiscal deficit, primary deficit, inflation, then current account deficit, GBA, GDP. These are the macroeconomic fundamentals that you are supposed to know. The definitions will be taught in your basic classes. I'm presuming that you know this, and that's why I'm not teaching them. Clear? So these are the reasons why you have a fatigue. Now, primary deficit, we discussed about it. What about India? Our economic survey talks about the Indian scenario. I told you India is doing fairly well, primarily because of the structural reforms and the policy changes, namely GST, investments recently as nuclear power getting a new impetus through Shanti Act now. Then labor reforms and some technological changes. All of them together combined with the fiscal consolidation, reducing our subsidies, moving away from this subsidy regime where indiscriminate distribution of money used to happen. Now we are trying to target the correct beneficiaries. After doing all of this, we have seen some positive news. This is what the survey says. Now, when it comes to GDP, GVA discussion, our economy can be analyzed from two perspectives, namely the supply side and the demand side. What is our approach for calculating GDP? Expenditure method. So is it on the demand side or supply side? It's on the demand side. Fine. So when you're looking at the various sectors of economy, you have to look at the screenshot here. One second. Yes. Take a look at the screenshot here. Is it visible? Everybody? Right. Whenever we look at the primary sector, automatically our mind will move towards only agriculture. But remember, primary sector involves other factors too, namely mining. Okay. Whatever supplies raw materials will become a part of the primary sector. Secondary means you are adding some sort of a value to that. And let's say you create an industry. You mine an iron ore. From that iron ore, you have a steel industry. Steel rod came into existence, and that created a machine. Now that machine needs to be serviced, right, from time to time. Just like how your bikes and cars require servicing from time to time, the industry also requires a service industry to support it. Otherwise, it will become inefficient over a period of time. That's why you have the primary industrial sector as well as the service sector. Primary, secondary and tertiary. Okay. This important point you should not miss. Public administration, defense and other services. Governance is also a sort of a service. Okay. And it is also contributing. So If your government job salary increases, GDP will also grow. In two ways. One way is through this. Other way is consumption. And there is also a possibility that unless we also supply more, demand side is also increasing. To compensate, supply side also should produce more. Otherwise, what will happen? Imbalance. 1 kg onion, 10 people are chasing. Automatically prices will rise. 10 kg onion for 10 people. Prices will remain stable. So, when you are supplying enough inputs for onion production, supply will also grow. There also you will see economic growth. Demand side also economic growth will be there. And some healthy inflation is always good because it will help us create new industries, create new jobs. This is the usual cycle of economy. So for economic survey and your prelims economy, this table becomes important. Your formula for GDP growth and respective trends on all these metrics. We discussed this briefly yesterday. We'll quickly go through the recap and official statistics. Okay. What is the survey saying? Supply side services, it's nice. Growth, 51% of Indian GDP is coming from, let's say if India is earning 100 rupees, half of it is from service. Okay. Industry, it's growing well, but it's still not enough. Agriculture is roughly 15%, 51 and 15, rest all is from industry. Clear? Private consumption, if you are talking about the C plus I plus G plus X minus M, take a look at the share here, 61%. Out of 100 rupees that is generated, 60 rupees is coming from consumption. So are we saving enough? Not really. When you are saying that consumption increased, automatically it means that we are not saving enough. Okay. It is good for economy in the short term, but bad for households in the long term. Clear? Next up, investment. Investment is coming into our country despite global volatility. What is the implication? Foreign capital is drying up, but domestic markets are catching up and compensating for that deficit. FDI has definitely reduced, but relative to the world, we are doing fairly better. Exact FDI numbers, etc., we will discuss in the external sector chapter. Okay. Exports, nothing much to talk about here, thanks to our Trump. So what is the overall message? Domestic demand driven growth, there is resilience, and structural shifts are there, which are highlighted in our economic survey. Okay, so for each of these components, I took out the numbers, and you can go through all the exact numbers. You can see the latest data, whatever trends that are necessary for survey, you can get the PDF. Take it from the team. Okay. So this finishes the first chapter of economic survey. However, first chapter also highlights one important area. Today, biggest challenge that we are facing is the quality of our statistics. We don't have real-time data. It is in this context our survey talks about this principle called nowcasting. Forecast, nowcast. As opposed to the principle of forecasting, we brought a concept of nowcasting. This is about on-the-spot detection of data to figure out how Indian economy is performing. Here, you will be looking at some high-frequency indicators. What do you mean by high-frequency indicators? Every day, today you are witnessing, every day people are using UPI. So if we track UPI data, instead of waiting 3 months for Ministry of Statistics and Program Implementation to give us data, don't you think we'll have a better picture of our economy? Policy makers can't afford to wait for 3 months in a fast-paced world like ours today. I want to know the consumption status of a rural setup, urban setup. What should I track? Let's say our survey says there are some proxy indicators. If I want to see rural growth, consumption of rural sector, I'll focus on, let's say, a very useful commodity for the farming community like tractors. It is based on historical observation. Whenever there is rural growth, tractor sales increased because they're investing. Every farmer knows that there needs to be investment into agriculture, but they are unable to afford it. Whenever they are able to afford it, tractor sales or machinery equipment will increase. It will make their life easier. Like this, there are a set of high quality indicators which you need not memorize. Again, the list of high quality indicators, high frequency, high quality indicators are not necessary to mug up. One of them being UPI. Okay. So there is a justification for every indicator taken, but I don't want you to go into the specifics there. It is not necessary for you. Okay. So these high frequency indicators give us a real time picture for the policymaker based on which survey is suggesting that we should take policy decisions. Okay. So as a result, what is happening? These are the numbers. Our banking sector health is fine. Our forex reserves, we are sitting at a historical high. Despite rupee weakening, we are sitting at almost $705 billion, if I'm not wrong. Exactly numbers you can go back and verify. Real GDP growth rate in the range of 7.5 is decent enough. Okay. This is what the survey says. However, is survey painting a rosy picture that Indian economy is beautiful and we are the best in the world? Then it doesn't become a survey. It becomes a congratulatory greeting card, which is not the agenda of survey. What are the vulnerabilities here? This is what we talk. Firstly, there is a division of, this is how I am dividing. There is high strategic risk and low strategic risk involved in our analysis. Let's say if capital flow volatility is there, an unstable environment is there for investments, then you can say it is a bit of a problem, definitely. But if there is uncertainty and the markets are not coping, that is a higher strategic risk. Then we have issues like CBAM, which we can deal with. It also gives us an impetus to move away from, you remember CBAM, right? I'm seeing some blank faces. What is CBAM? What is happening there? EU is imposing an additional tax for any good, that is any goods that are coming into their country which are manufactured through an unclean process. What do we mean by unclean process? Where the carbon emissions are very high. Steel sector in India, one of the major contributors to greenhouse gas emissions, would definitely see that as a problem, given the fact that EU is a large market for Indian steel companies. Let's say, for example, GSW, Tata Steel. They will face some challenges there, but we can navigate through them, and also gives us an opportunity to diversify our markets which are concentrated only in a few. The larger issue is we not being able to deal with our structural issues. We should focus on those issues, is what the survey is saying. One more thing is critical minerals. This little that we can do. China controls it. So it's like we are moving away from oil and getting in the trap of minerals. At least there, even if we like it or not like it, we can either buy Russian oil, Venezuelan oil, Gulf oil, or shale gas. Something we can do, ethanol blending. But what about this? It's a gap for us. We don't have them. We are dependent on mostly China, which is not a good idea. That's why in this context, I'm I don't know how many of you know this. I've been talking about this concept for quite a while now. There are a couple of young college graduates who were conducting research on sodium ion battery. Heard about this anytime? Even a couple of days ago, there was an article in Hindu. Reliance bought the patent for a very low cost, as low as 8 or 9 million. I mean, it might seem like a lot of money, but imagine if they're making 9 trillion out of 9 million investment. What is sodium ion? Where will you find sodium? Salt. Tons and tons of salt is available in our oceans. If we can actually create a sodium ion battery that works, I think we have cracked the code. Even hydrogen is very expensive. Right? So this is what, anyway, we'll get him back to that. What is the conclusion? We are not just happy with strategic resilience. We have to move towards strategic indispensability. That is, without India, the world can't survive. It's a very good aspiration to have. We have to become so efficient in every sector that this becomes a reality. What are the things that our survey suggests we should focus on? First is increase the scale. We have to push for the market depth. Most of the products that you see today don't reach the Indian consumer in tier 2 and tier 3 towns. It is mostly the tier 1, the top 1 percentile of this country supporting our growth. Imagine the real India, where 90% of India even contributes a bit to this consumption story in a sustainable way. I think we are going to, see a landmark shift in the consumption patterns. And mostly companies are trying to crack the code in that way only. For the upper class, upper middle class and the rich segment, what was once an aspirational lifestyle now becomes a norm. So the rich are moving towards fancier products, like say clean air, clean water. Now the rest of the world is moving towards something which is so common to the rich class now. Again, clean air. How many of you are actually drinking water from the cans? Most of us are using the cans, right? Something that was taken for granted, like say 10-15 years ago, now you are not able to drink water, clean water, without the help of these cans. See the shift in the patterns. So anyway, just coming back. Domestic demand. That is what we are focusing on. That is what the survey says. Strategic sectors. What are the strategic sectors? Any sector that moves us towards technologies that can control the world. Semiconductors, digital public infrastructure. This DPI is extremely important. Can you tell me one such DPI? UPI. If we can use UPI as a role model and make the world connected on UPI, we can control the global financial industry, fintech industry. Critical minerals, there is nothing much we can do in terms of procurement of raw materials, but processing them, making them more efficient, we can do something there. Next up, digital public goods, trade diplomacy, global south leadership. These are the IR aspect, not much to do with our topic here today. Fiscal discipline, reduce the wasteful expenditure and increase capex. This is what the survey says. So this is the architecture that you need to showcase in your mains answer. If you are deviating from this, the marks that you are going to get in mains is going to reduce. This is the historical trend. Whatever is given in that first chapter of economic survey will become the blueprint of answers of that question. Like in the past 3-4 years, like 5 years, I was fortunate enough to give questions in my mentorship series where I've almost had a 100% hit rate in only GS3. What did I do? Nothing much. Read the economic survey line by line. Predict the questions, map it to the current affairs. You will pretty much figure out what will be the question paper. I am predicting a question on any of these 4 metrics in GS3 year 2026. Mark my word. Today you will see any of one question at least. Whatever keywords you see, associated keywords, you will find at least one question. Okay. How did we get here? What are the various phases? This is what we are talking about. Peak globalization era, then trade wars, then energy weaponization. Let's say all the trade wars, like all the wars, Russia-Ukraine war, access to energy. Europe did not have oil for a significant amount of time. Okay, their heating needs, like Europe is a very cold area. If they don't get enough gas supply, energy supply, they can't use their, thermostats and air conditioners to keep them warm. So this was also one scenario. Next up, you are witnessing now AI race, semiconductor nationalism. So this is what is the reality now. Economics is now an extension of geopolitics. Okay, that's it for today. Chapter number 1 of economic survey, which is the most important blueprint for how we have to navigate the next year and also few years down the line. You've got the context. Every economics related current affair issue will be an offshoot or a logical consequence of what we have discussed now. When you're reading the editorials and if you want to know how to pick those themes, this discussion is going to help you for the next 1-2 years. The importance of the survey is not just for this year, I will say at least 3 years. Okay? Everything will build on this discussion. See you. One more thing. Tomorrow also you have a class instead of Saturday because I want to quickly wrap up this economic survey lectures. Saturday there is no class. Again we will be meeting on Tuesday. Saturday's class I will be taking at 5 o'clock tomorrow. Not 5:15, 5 o'clock. Please be here by 5 o'clock tomorrow. Thank you.